Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about ASBURY Automotive Group INC quarterly report. ASBURY Automotive Group offers a wide range of automotive products and services. The company's key offerings include new and used vehicles vehicle repair and maintenance services, replacement parts collision repair reconditioning of used vehicles finance and insurance products, including vehicle financing and aftermarket protection plans, extended service contracts, prepaid maintenance contracts, key replacement, contracts paintless dent repair, contracts appearance protection, contracts tire and wheel services, lease wear and tear contracts. These products and services are sold to individual retail customers, other dealers and licensed wholesalers through the company's network of dealerships and at auctions. The ASBURY Automotive Group Inc. stock price has remained relatively stable over the past year, with no significant changes exceeding 4.56%. Several news events, including quarterly earnings reports and corporate announcements, have failed to trigger substantial market reactions. The company's strong financial results, such as surpassing EPS expectations in multiple quarters, have been met with modest increases in stock price, but these movements have fallen just below the 4.56% threshold. The acquisition of the ASBURY Chambers Automotive Group has also had a limited impact on the stock price, despite being a significant strategic move. Other events, like the inclusion in Newsweek's World's Most Trustworthy Companies list and the appointment of a chief operating officer, have not resulted in any notable stock price changes. Overall, it appears that ASBURY Automotive Group Inc.'s stock price has been influenced by a combination of factors, including stable financial performance, strategic acquisitions, and routine corporate announcements. However, these events have failed to generate significant market reactions, resulting in a relatively flat stock price over the past year. The primary drivers of revenue growth are largely attributed to the expansion of new vehicle sales, parts and service revenue, and luxury segment revenue. The increase in customer pay revenue, warranty revenue, and reconditioning services also contributed to revenue growth. On the other hand, a decline in used vehicle units sold, lower revenue per used vehicle retailed, and decrease in collision revenue were among the primary drivers of revenue decline. Additionally, fluctuations in foreign currency exchange rates, changes or increases in tariffs, trade restrictions, local and national economic conditions, and the ASBURY Chambers acquisition also had an impact on revenue growth and decline. Net income and profit margins. A shift in performance. The company's net income has experienced a significant increase of $20.8 million, 16.5%, for the 3 months ended September 30, 2025, and a substantial rise of $130.5 million, 43.3%, for the 9 months ended September 30, 2025. This growth can be attributed to improved operating performance, reduced asset impairments, and increased revenue or sales. However, profit margins have shown mixed results. The gross profit margin decreased by 0.2% from 16.9% to 16.7% for the 3 months ended September 30, 2025, but increased by 18 basis points for the total company and 6 basis points for same-store sales. Operating profit margins also saw a $9.9 million, 4%, increase for the 3 months ended September 30, 2025. The adjustments made to depreciation, rent, and interest expense related to the ASBURY Chambers acquisition may have contributed to the change in profit margins. Overall, the company's net income has seen a notable rise, while profit margins have shown some fluctuations due to various factors. The company's financial performance indicates a strong generation of operating cash flow. According to various sections in the financial summary, net cash provided by operating activities was $623.3 million in 2025 and $427 million in 2024. Additionally, operating cash flow is reported as positive at $123.9 million. The company's ability to generate positive operating cash flow is confirmed on multiple pages, including page 21 and page 23. This suggests that the company is successfully managing its finances and generating sufficient cash from operations. The company's debt level has increased significantly over the past year. Long-term debt rose from $3,023.9 million to $3,498.6 million, while total debt outstanding increased from $3,158.5 million to $3,627.9 million. Non-trade floor plan borrowings also saw a substantial increase, rising from $6,000 $918.4 million to $7,946.5 million. In terms of interest expenses, there was a notable rise in both floor plan and other interest expenses. Floor plan interest expense increased by 19% to $26.7 million, while other interest expense net rose by 12% to $51.3 million. These changes indicate that the company's debt level and interest expenses have grown substantially over the past year. Management is optimistic about the company's future prospects, citing several key initiatives and trends that support its positive outlook. The company is expanding into new markets through strategic acquisitions, such as the Herb Chambers deal, which will enable it to roll out TCA products to additional locations. Additionally, management is focusing on organic growth, with a strong emphasis on same-store sales performance. The company's share repurchase program remains robust, with $400 million in authorization, and management expects to continue buying back shares based on market conditions. Capital expenditures are expected to total around $175 million in 2025, while debt management is being closely monitored, with sufficient funds available for acquisitions and capital projects. Overall, the company's outlook appears positive, driven by a significant increase in adjusted cash flow provided by operating activities and a strong financial position that will enable it to execute its growth strategy. The company's financial summary reveals that it has engaged in share buybacks as a means of returning value to its shareholders. Specifically, the company utilized the 2025 real estate facility to purchase shares and also obtained $400 million in authorization for share repurchases, resulting in the retirement of over 1 million shares. That concludes the financial summary for ASBURY Automotive Group Inc. Feel free to comment below, and I will be happy to answer them when possible.